Let me start with this. Something important is happening in the global financial system right now, and most people aren't paying attention. There's no emergency press conference, no breaking news banner on TV. But if you look closely at banking rules, metal markets, and government behavior, you start to see a pattern forming. This video is not about panic. It's not about hype. It's about connecting the dots, calmly, logically, so you understand what's changing beneath the surface. Because when systems change quietly, the consequences are usually loud later. Over the past few years, governments and central banks have been doing something unusual. They've been reducing trust in paper systems and quietly increasing exposure to real assets. Gold purchases by central banks are near historic highs, and this trend hasn't slowed, even with higher interest rates. That alone should make you pause. But here's the part most people miss. Silver, unlike gold, is not just money. It's industrial, strategic, and irreplaceable in modern technology. Solar panels, electric vehicles, military electronics, medical equipment. When governments care about supply chains, silver suddenly matters a lot, and that's where things start getting interesting. Let's talk about silver markets, specifically futures markets like COMEX. On paper, everything looks fine, but behind the scenes, exchanges have been raising margin requirements, forcing traders to put up more cash just to hold positions. When margins rise sharply, it does two things. First, it flushes out speculation. Second, it hides deeper problems by reducing visible demand. This is important because margin hikes are often used when volatility is rising faster than exchanges are comfortable with. And lately, silver volatility hasn't been driven by hype. It's been driven by physical supply concerns and industrial demand pressure. That's not normal behavior for a boring metal. Now let's talk about China, because this is critical. China recently tightened controls on silver exports, requiring licenses and approvals that didn't exist before. This is not a headline-grabbing move, but it's a powerful one. When the world's largest industrial consumer starts controlling outflows, it sends a clear message. We're prioritizing domestic needs over global supply. That doesn't mean shortages tomorrow, but it does mean less flexibility in the system. And in markets that rely on just-in-time delivery, flexibility is everything. This isn't about politics, it's about resource security. Now let's move to banking. New banking rules are being introduced in multiple regions, especially around liquidity, capital requirements, and risk exposure. On the surface, these rules are framed as stability measures, and to be fair, some of them are. But historically, when banks are forced to hold more capital, it usually means someone doesn't trust the system as much as before. Tighter rules don't appear during calm periods. They appear when stress is anticipated. This doesn't mean banks are about to collapse, but it does mean regulators are preparing for volatility, not growth. And when regulators prepare, they do it early and quietly. Here's the core issue most people don't understand. There are two silver markets, the paper market, which includes contracts, futures, and derivatives, and the physical market, which is real metal and real delivery. As long as trust exists, paper works. But when trust weakens, people start asking one question: can this actually be delivered? That's when pressure builds, not overnight, but slowly. You don't see collapse first. You see rules change first. Higher margins, export controls, stricter banking requirements. These are not random actions, they are defensive actions. So what does all this mean for you? It does not mean panic. It does not mean dump everything. It does not mean financial collapse tomorrow. What it means is this: the global system is slowly shifting from trust-based efficiency to asset-backed security. When that happens, flexibility decreases, volatility increases, and mistakes become more expensive. History shows this pattern clearly. The people who struggle the most are those who assume everything will work the way it always has. Let me leave you with this thought. Major financial changes never announce themselves loudly. They arrive quietly. They adjust rules. They shift incentives.
And by the time headlines appear, the opportunity to prepare is usually gone. Stay calm, stay informed, and most importantly, pay attention to what governments and institutions do, not what they say. If you found this useful, consider subscribing and let me know in the comments what you think is changing right now, because this conversation is just getting started.